What's up, you guys? So we all know the general deal. When the stock market goes up, our investments that are long-term investments, that we are long something, we bought a share of a stock, we have an ETF, those tend to go up. But what happens when the stock market goes down? Are we just supposed to sit there and stare at the screen of us losing money, or can we actually do something about that? And that is the purpose of this video. So what I want to do here in this video is give you guys some actionable tips to actually take advantage of when the stock market is going down. Now, of course, this video is not going to be like a one-time thing. Of course, the stock market did kind of crash not that long ago, and it came down extremely hard. And when this video goes out, who knows? We may be due for a second crash, or the second time we're going to go down pretty hard. We don't know. Or if this could just happen in a couple years or in a couple months, where we have temporary periods or temporary days where the market just goes down. There's negative news, something's going on in the economy, and things just take a little bit of a hit. It's only temporary, but instead of just seeing the red on your screen and seeing your investments go down for that day, maybe there's something you can do about it. So I'm someone who is actively trading every single day, and it doesn't really matter if the market's going up or down. I know how you can make money either side, and I've made videos showing you guys how to trade options on both Robinhood, on Webull, and really you can take the things that I say in those videos and apply it to options trading on any platform. But when you trade options, that's one of those ways that you can actually make money when the stock market goes down. All you have to do is buy put options. And so what do put options mean? It's essentially a bet that the stock, or whatever you're actually buying the option for, the underlying stock or the ETF or whatever it is going to go down. And if it goes down, generally you're going to make money. There are some ways you can actually end up losing money or keeping your investment break even, depending upon how long it takes for it to go down, factors of volatility and things like that, time value. There are those factors, but if you were to simply make a short-term trade, not more than a couple days, maybe a week or so max, if the stock market goes down or the stock goes down that you buy a put option in, well, you're probably going to make money on that put option. So what can it do? Well, it can actually offset some of the losses you may incur based off your long-term investments or your other long investments going down on those red days in the market. So let's say you're long in Apple, right? And Apple goes down a couple dollars in one day because the overall market goes down. There's negative news. Maybe there's some negative China news. Something happens. Well, what can you do? Well, you might own the shares of Apple stock, but what you can also do is buy put options on Apple stock, and if Apple stock goes down a few dollars, and you might make a few dollars on those put options. Actually, you can make more than a few dollars depending upon how you go about that and depending upon how much money you're willing to invest. Yeah, you can make more than a few dollars to cover those losses that you may take for that certain day. So in a sense, there's not really an excuse for you to ever have a red day. Now, of course, it's always going to happen. It's inevitable. Not everyone's going to be perfect, but there are ways to avoid having red days, and this is one of them. Now, I myself am someone who trades more actively on the penny stocks, low float stocks. So what does that mean? Now, that's like a whole other side. So what I really want to do here is get to some really cool ETFs that we can talk about that model certain industries, and actually like inverse ETFs, which is going to be kind of confusing, but we'll go over it. We'll make it simple, easy to the point where you guys can get in and out of trades, swing trades, day trades, whatever you want to do. I'll share with you, and I'll actually provide a link to where I'm actually finding like a full list of all these ETFs that you guys can actually find and actually refer to yourselves. But when I trade these penny stocks, what it really comes down to, it doesn't matter. It's like the small cap stocks, not the big names. You probably haven't heard of these companies. But what it comes down to is it's where the money is flowing. So if right now the stock market's going down, but also right now biotech companies, pharma companies, those types of companies are getting a lot of traction, a lot of push because they're coming out with potential virus news, they have vaccine news, good news on those fronts. Well, those stocks, some of those stocks can do very well in one day. When I'm talking very well, if they release news, for example, of working on a vaccine or phase 1 trials or something like that, I have seen days where stocks have gone up over 1,000% in one day. Now, of course, that's speculative, that's like risky. It can be a lot riskier than just long-term investing in a solid stock like Apple or Amazon, yes, of course, but again, that's a way to make money. So if you want to follow along what I'm doing, I'm day trading on the side, but I really focus and I primarily share here, guys, on the channel, the swing trades. So people who are under that PDT rule, that $25,000 account minimum, right, to have free day trades, right? If you don't have $25,000 and you're using a US broker, you have the PDT rule. So I'm making videos going over my swing trades. If you want to stick around for those videos, make sure you're subscribed, because every single Saturday I do go over my swing trade plays that I'm holding into next week, what I learned from the past week, what I played, all those things. So hopefully it's transparent. You guys can see everything that I'm trading. We're going to my account and all that, see how I'm growing it consistently over the past couple months, and hopefully that's helpful. But that's kind of like one way you can also make money when the market goes down, because those different stocks and those industries tend to actually do good sometimes when the market's overall kind of headed to the woodshed. So now let's get into some ETF plays. And so you probably can do your own research and find ETFs, and you may have even seen ETFs in the past. I've talked about ETFs, and so what are some ETFs that I like? SPY, for example, is an ETF, right? SPY, type it into your Robinhood, type it into Webull, type it into Team, whatever broker you have, right? SPY, it's going to model the S&P 500, okay? It's an ETF that right now it's sitting at around $300, okay? So you can model the S&P 500 by buying a share or, a fractional share, whatever you want to do. If you have Robinhood, if you have fractional shares, which is potentially possible. And I have links down below to sign up for Robinhood to get fractional shares, to get all those different things. I have a link down below to get free stocks on Robinhood and 2 free stocks on Webull. Again, you don't have to use those brokers. Those brokers I use, I find them pretty cool. I really highly recommend Webull actually for more of those penny stock plays because of the trading hours they offer. But you can invest in SPY on any of those platforms and model the S&P 500. So if I want to just make a solid long-term investment in an ETF like SPY, well, guess what? We call it SPY a lot of times, and I can just buy SPY, and over the next couple of years, look at the history. Look at the past 5 years, look at the past 10 years. SPY has just been on a nice increase. Of course, we have those drops. We had a drop as of late, but zoom out, look at the long term. Yeah, you're going to see a solidly uptrending stock, modeling the S&P 500, modeling the U.S. economy, which in a sense is a good long-term bet. But how do you take the reverse side? So when SPY is going down, when the market's going down, when there's bad news, if you're anticipating bad news, how do you take the reverse side? Well, there's other ETFs. So the first one I want to talk about is actually SH. Just type in SH into your ticker symbol, and that is going to be the inverse ETF, the exact opposite of SPY. It's like the inverse ETF one time, okay? And I'm going to have a link down below to this site that I found where you can find all these ETFs that I'm going to talk about here and more. There's going to be plenty more you can look into. You can find all the different things. You can click on them, get more information about them, their expense ratios, all these different things, and see how they all work. But to keep things simple, if the S&P 500 is going down or you anticipate it will go down, a great hedge is to just buy some SH, and you can buy it for a couple of days, don't hold it too long, and boom, just like that, you can kind of cover yourself to the downside. Now, one other play that I actually made a mistake of buying not too long ago is SPXS. And so what is that? Well, that's actually the 3-time bear ETF of the S&P 500. So picture SPY, picture in reverse, times 3. So if the S&P 500 goes down 1%, in theory, this ETF is going to go up 3%. Now, that sounds cool and all, but if you actually do the math, if you take a spreadsheet and do the math out, if you are going to be long-term in this ETF, a 3 times ETF, you're going to actually lose money unless there's a massive move to the downside, and that move happens pretty much very fast, right? That's how you actually make money on those plays. So what I recommend for those 2 times and 3 time ETFs, I recommend you either trade them with options or you day trade them or trade them on a very short time scale. Why do I say that? It was because I just mentioned before, if you hold those long term, do the math yourself, you'll actually see that you're going to end up not losing money. You can lose money, and I actually lost money on these plays because the market actually went down slowly and then it went back up. But what ended up happening was my actual investment, it never went green, right? Okay, it never went green. I thought the market was going to come back down even harder. I thought we didn't hit the lows of the past couple months. As of now, we kind of have. And so I kind of made that mistake myself, and I lost more than I even should have. So that was my mistake, but SPXS is a 3 times. So think about this. If the S&P 500, and it has had times where we actually just hit the breakers where it was down 7% and they actually halted the market for 15 minutes. If you have a day like that, that's a 21% potential return in one day by SPXS. So that's your potential upside with a bear ETF like that. Now, of course, you want that move to happen pretty soon short term, so I'd recommend more day trading that, but it's an option. Another one is PSQ. Now, this is going to model the QQQ. So if you want to model the QQQ but in reverse, you're going to be short the QQQ, and you can buy PSQ. Okay, so essentially, QQQ, look it up, ticker symbol QQQ, that goes down. Well, PSQ is going to go up, right? Simply stated, pretty much straightforward. Also, one other to note is TZA, the small cap bear index. So it's actually the small cap bear index times 3. Okay, so if the small cap index, right, goes down, if that goes down, this is going to go up, and it's going to go up times 3. So essentially like SPXS, but it's small caps, and so small caps tend to be pretty weak, and so sometimes you'll see correlations where if the market's going down, small caps may take a pretty substantial hit. And it actually happened not too long ago where I noticed, and I hadn't noticed it as of this to this magnitude, where small cap stocks, the whole in general, right, TZA was an amazing play for about a day or so, because the market went down and they took a massive, massive hit, more than I've at least been seeing lately. And so that was a great play, but those are a couple kind of great ideas. Hopefully kind of gets things turning inside your head. I'll leave a link down below to the entire, like this whole thing that I'm pulling these off of. And I have some experience trading some things like I mentioned before, but that's kind of how you can make money, guys, when the market goes down. So do your research, look into what these ETFs and what these things do, right, what they're modeling. If they're 3 times ETFs, 2 times, I would just make sure you look in a whole short-term time scale. Either you get the move to the downside, right, or upside, and that's it, and you move on, or you don't, and you kind of just take the loss, sell it, get rid of it, and make sure you move on. Because long-term, if the market kind of goes up and down, doesn't really make a sustained move one way, you're probably not going to actually make money, or you're going to lose money on that play. So hopefully that makes sense, guys. I have links down below to those Robinhoods, to those actual Webull links where you can grab your 2 free stocks on Webull, deposit $100, get a stock up to $1,400. Some awesome stuff there on Webull. I highly recommend it. I use the broker every single day. Great trading hours, and I also have videos going over my swing trades. I'm making more videos going over my trading strategies and things like that that have helped me grow my account significantly, a couple 100% over the past couple months, which has been incredible, and I hope to share more of those things here on the channel going forward, so make sure you are subscribed. Hit the thumbs up button, guys. I appreciate every single one of you who do so, and I will see you guys Monday, Wednesday, Friday, and Saturday. Have a good one. Peace.